Hello and welcome to Invest to the Moon. The stock market has been on a wild ride in recent months, with investors facing a number of challenges. We'll take a look at 5 key events that could impact the market in the second week of May. The first event that we'll be discussing is the U.S. April CPI inflation. On an annual basis, the inflation rate was 4.9%, slightly less than the estimate, which was 5%, lowest annual pace since April 2021. This provided some hope that the trend is lower. The second event that we'll be discussing is the U.S. Economy Inflation Insensitivity Advisory. This advisory was issued by the Federal Reserve, and it warns that the economy is becoming more not sensitive to inflation. This is a sign that inflation is still a problem, and it could lead to more action from the Fed to try to bring it under control. The third event that we'll be discussing is the 264,000 U.S. jobless claims. This number is higher than what economists were expecting, and it's a sign that the labor market is starting to cool off. This could lead to lower corporate profits, which could hurt the stock market. The fourth event that we'll be discussing is the banking crisis at PacWest Bank. PacWest is a regional bank that's based in California. The bank's deposits have fallen by 9.5% in last week, and this is a sign that investors are losing confidence in the bank. This could lead to a broader banking crisis, which could hurt the stock market. The fifth and final event is the end of the U.S. COVID-19 public health emergency. This emergency was declared by President Trump in March of 2020, and it gave the government broad powers to fight the pandemic. When this emergency ends, government spending on the pandemic could hurt the economy, but reopening stocks could benefit. In conclusion, the events of the second week of May had a negative impact on the stock market. Inflation, the Fed's advisory, the jobless claims, the banking crisis, and the end of the COVID-19 public health emergency are all signs that the economy is slowing down. I hope you found this video helpful. Thanks for watching and happy investing.